Now, the biggest cue for the market, of course, today is going to be the RBI decision. Will the RBI, despite that 8.2% GDP print for the second quarter, will the RBI still go ahead and deliver the 25 basis points rate cut? Well, let's get in, Latha, with the editor's take. Latha, morning.
Morning. I'm none the wiser, and I don't think the market is any the wiser. Like I have been saying, our Citizens MPC voted 3:2 for a status quo, whereas Ritu's poll showed 60-40 in favour of a cut. If you notice, both are narrow margins. So, you can make a very strong case for a cut, because when have we last seen a 0.25% inflation? And, the RBI's mandate is 2 to 6% inflation, and we are below 2% for 3 or 4 months, or even more in the current year. Therefore, it is mandated that you have to give a cut. However, the other side is that should you reserve the space? After all, growth is very strong. Space for a supporting growth doesn't mean need for supporting growth. And now with the rupee, the picture is much more murky. Maybe you want to preserve this at a time when there is instability, could be an argument. We are not a rate receiver. Money doesn't come to us only because of rate differentials. It comes because we are a growth story. But this argument needs to be rethought now. Do you know this year, equity saw outflows of 17 billion. Debt saw inflows of 8.5 billion. Not a small number. So rate differential can make a difference, and we must be conscious of it. When the interest rate differential between the two countries is narrowing, the US is trading, 10-year is trading at 4%, and our currency is depreciating. You may not want to lose that debt money. So a strong argument can be made to leave well alone, preserve the ammo for a different day. And moreover, what is the gain of a 0.25% cut? Banks are extremely wary of passing it on because of the margin impact. So they'll dilute it. They have to when it is an external benchmark-linked loan. But in the other loans, they'll try to postpone it. What happens to the bond market? They know it is the last cut if there is one. So again, there will not be, too much of a movement in bond yields. Maybe 1 or 2 basis points, not significantly different. For the stock market, a cut might mean negativity for bank stocks and a lot of positivity for the interest consumers, like, say, consumer durable stocks or autos, real estate, but not a great deal when it comes to 0.25%. Ultimately, you should have the ability to buy a house and the need to buy a house before that 0.25% makes a difference. So I don't think the markets, any of them, are going to be disturbed. I think the big point will be what he says. What he says about standing ready to help growth if it needs help, or what he says about the rupee. I think that's the second most important thing. People will watch out. RBI doesn't like to speak about it, but this time every journalist in the presser is going to ask him to speak something on the rupee's fall. And finally, and most importantly, liquidity. Does he announce that he is going to buy bonds, what you call OMO purchases? The market is much more worried. Banks are much more worried about liquidity. If there isn't any liquidity, they have to pay higher rates to get deposits as well. So a comfortable liquidity will be to their advantage. Let's see whether he says that.
All right, Latha, thanks very much. That gives us a nice sort of a framework to go with as we get set for the decision, which is less than 2 hours away from now.